Hi, it's Rob Levy here again with the Rob Levy team in Portland, Oregon. Wanted to talk to you about a couple of things. I was recently talking to a client who'd gone out and purchased a new car just before closing. And I wanted to share with you a few do not do things if you're thinking about buying a house.
This is Rob Levy with the Rob Levy Real Estate Team, sharing my years of experience with you.
So there's really about 5 very important things about don't do. The first one is deposits. Don't put any large deposits in your account. What will happen is the banks will look at those and try and trace as to where they're coming from, and they have to be what's called seasoned. So large deposits, large purchases, I mean that's obviously the one that I was talking about here is a car purchase, that will mess up your credit significantly. Don't do any co-signing. Sometimes people don't think when they're co-signing for somebody else that it hurts them, but it does. As far as the banks are concerned, you're just as liable for that payment as the person that you're helping sign the forms for. So don't do any co-signing for any new loans of any kind, car loans, house loans, whatever. Don't be changing bank accounts. I know my wife and I are just recently changing some bank accounts and realize it affects a lot of things. Your credit report looks at seasoned bank accounts, how long you've been using them. And so if you do change your bank accounts, you're going to need to wait a couple of months for everything to season and all the payments to come through and get all the new records and so on and so forth. Don't be applying for new credit. That one you think would be simple, but people do. So don't try and pick up a new credit card with one of those year-end specials or monthly specials that you see, because that will ding your credit report and it'll cause a mess. And don't close any accounts. So this one's kind of interesting. You'd think, hey, I'm going to improve my credit record. I'm going to close a few accounts. Well, don't, because the amount of credit that you're actually using is weighed heavily into your payment schedules and everything else as far as what the banks figure out. And they look at those existing accounts and how well you've been treating them. So those are the main things I wanted to talk about, but really any blips, I mean any blips that come up, if you've got an employer that says you think you're going to be laid off in the next month or something like that, don't change employment, all of those things matter. So I'm not a mortgage lender. We work with a lot of mortgage lenders. If you've got any questions, give us a call and I'll put you in touch with one of our mortgage lenders and they can go through the specific details unique to your situation. Thank you so much for watching this and we'll see you again soon.